Happy Monday, everybody. I hope you had a great weekend. Is anyone else starting to feel that summer's right around the corner? Today is May 16th, 2022, and this is your Monday market update. Last week was another big week in the market, so let's jump right in, recap last week. Let's see what this week's going to bring us. Stocks were already looking lower before they opened on Monday, as focus was on the lockdown measures in China as COVID cases are rising. So the market gapped lower on the open, and new 52-week lows were put in. Stocks tried to bounce as the European markets closed, but that was met with fresh selling, and that overpowered the dip buyers. Atlanta Fed President Bostic threw a lot at the market with comments that the 75 basis point move was not in the cards right now. Recall that comment rallied the markets the week before last when Powell said it. No such luck this week. He also said that inflation may be peaking and the labor markets are still very strong. There was a lot to unpack about that, but the market attempted to react favorably to it and then rolled back over, hit new lows, then bounced slightly to close just over 3% on the down, just over 3% on the S&P 500. Dow was down 2%, and the Nasdaq was down 4.3%. We spoke last week about the technical support. That was really not around last week. You have to go back to Q1 of 2021 to get to this level. It's very difficult to watch markets like this, but recall, as long as you're invested for the medium or long term, the facts will drive this market. There were few new facts Monday. It was mostly momentum, fear, and a healthy dose of forced selling. It is notable that as the air gets let out of this market, some of the most highly speculative places in the market are really being addressed. Remember SPACs? Last week, Goldman Sachs basically said they backed out of this market. Cryptos also getting sold off pretty harshly. After opening with what looked like an oversold bounce on Tuesday, there was little momentum and no news to take the market any further. Markets churned sideways. Then Mester took the mic, mentioned that 75 basis points was possible. Remember Bostic from Monday? And that we might actually see a second negative GDP print, thus making it a recession by definition. The S&P gave back its gains, turned negative. The next Fed head spoke, Waller, and he sparked the markets backed up a bit by saying that the economy can handle the sharp rise in rates, and that if we get a pullback in labor demand, it'll be a good thing. Mid-afternoon brought a test to the recent highs. The momentum would not hold, but the S&P closed up about 10, or 0.25%, ahead of Wednesday's CPI print. Dow was down 85, and the Nasdaq up 115. Sounds like the market's confused, no? So we started Wednesday with strong futures until about 8:30 when the CPI hit. S&P 500 futures fell by over 100 points, peak to trough. Market stabilized at the open, but with no real momentum, and the market was back to sideways. The S&P 500 gave back its morning gains, turned negative on more Fed comments, and the market hit a wall. S&P 500 down 1.65%, Dow down 1%, and the Nasdaq down another 3.2%. Let's talk about the CPI report for a minute. Remember that one, this one, and the PPI from Thursday were the market movers last week. CPI came in at year over year, did decline from last month. It went from an 8.5 last month to an 8.3 this month, year over year. It was higher than expected, and the core was also still higher than expected. Core is running about 6.2%. Recall, the Fed's target is 2%. Long way to go. Overall, make no mistake, this did not change any of the Fed voters' minds. They're still hawkish, but it did give them more solid ground for their current course of action, more rate hikes. By the way, in case you're watching, the dollar index is still close to 104, and that'll be hard on the multinational companies for earnings. Listen for that in their earnings reports. Stocks gapped lower again on Thursday, and no, this is not a glitch in the video. Yes, down again. But spoiler alert, pay attention. We sell you the whole seat, but you only need the edge. Economic data and geopolitical tensions were weighing on the markets. GDP, industrial production data from the UK, Bank of England warning about rate hikes, and Finland's formal application to NATO. Sprinkle in jobless claims at 3 months high. What's happening to those 11 million jobs that are open? Oh, and that pesky PPI we're waiting for, 11% versus 10.7% expected. The core number was lower than estimates, but as you've heard me say, this is important to build the Fed's case, but they're not changing their course based on these numbers. Soon after the open, stocks stabilized and then tested the lows after the European close. Fed head Daly came out and again from another one discounted the 75 basis point move as not necessary, and 50 should do it. The market tried to late day rally. S&P 500 almost made it, closed down just 0.13%. Dow lost 104 points, but the Nasdaq ended up the darling of the ball, up a whopping 6 points on the day. Not the kind of reversal we saw a few weeks ago, but a reversal nonetheless. And boy, did it spark the is the selling over conversation again. Friday had stocks jumping right off the bat, and as Sam Soval said, just as trees don't climb to the sky, prices don't fall forever. By the end of the day, without any major news to account for the gains, the only news that could have helped was China's lockdown may end by May 20. Today's news puts that into June 1st. The Dow would be up 466 points for the day, almost 1.5%. S&P 500 was up 2.39%, and the Nasdaq was up almost 4%. All of this, and they still did not go positive for the week. The S&P had its best day since May 4, and NASDAQ had its best one-day gain since November 2020. All the S&P 500 sectors were positive, were higher, and 95% of the S&P 500 was positive on the day. So we're about to head into a new week with a glimmer of optimism, or at least some. We may see some selling of the rally. What will set a bottom to this market? I've mentioned three things, so keep an eye on these. China lockdown easing. We've talked about that. Inflation, not just peaking, but the CPI and such coming down. We have some economic numbers this week to watch. What we want to see is the slowing of the economy, not a sharp drop-off in activity. That will reignite the stagflation fears. Finally, as you can expect, geopolitics should cool off a little bit. As these three events unfold, as we hope they will in some way, we should see the bottom put into this market. Until then, we'll see more volatility, and we'll see sell-offs, and we'll see rallies. The Fed doesn't meet again for a few weeks, so that may calm some of the selling. But remember, the Fed actions are pretty well telegraphed. Remember, no need for the briefcase indicator. You can listen out for Chair Powell, who's speaking this week at a Wall Street Journal conference. But I'll tell you, the major things to look at in coming weeks and months are about the economy. We know that the Fed's going to be aggressive with rate hikes, although I've told you that I don't think that they will be able to be nearly as aggressive as they think they can. A whole gaggle of Fed heads speaking this week again, so watch for them to whipsaw the markets as they did last week. Remember, much of what they say may just be checking the temp of what the market and the economy will do with certain things. This week, we'll see retail sales. Remember, we're a 70% consumer-driven economy. Will the health of consumers show through? Take this number and be careful. It is total dollars spent number. So as prices go up, this number goes up too. That may account for everyone paying more for eggs, not buying more eggs. Home Depot, Lowe's, Walmart, Target, and also they're also going to be coming out with earnings this week. That should give some information on consumer spending. Housing reports are also out this week. The normal jobless claims. Let's keep an ear out for some important reports that are not on the calendar, but are some of the biggest headwinds of this market. The 10-year yield is back over 3% this week. Dollar index over 104. I mentioned that. China lockdown news. Russia war news, inflation peaking, and will we see any supply chain news turn any better? If we see these things, watch out, buckle up. Boeing's trying their hand at space launch again this week. Watch out in the market. Any good news from these fronts I just mentioned could put us into a new orbit. For now, remember, stay nimble, stay in touch. Remember to check out the Friday planning video. Have a great week.